What would be your recommended 6-month plan to fully break into VC as possibly an international student in college? And say like month 1, 2, 3, 4, 5.
Okay. All right. In your first month, just get out there. Just let go of whatever you think you're cringe, you're not in the right space, I don't belong here. Let go of all of that. No imposter syndrome should ever live in you. If you're feeling imposter syndrome, that's a good sign that you're in a room where people are better than you. Stay in that room. In your first month, it should just be about getting exposure. Go to these events, start meeting people, start chatting with people with no expectations of anything in return. In month 2, once you've developed these early relationships where you're probably on like your third coffee, your third video call, whatever, now it's time like, okay, I have a Rolodex of a month of people that I've met. Let me start connecting people together. Hey, you should meet this other founder, this other founder. That would be useful. In month 3, you keep doing that. In month 4, that's your first 3 months. Just build connection, a network of great founders that you know, that you've plugged up with other people, that know that you're a reliable person and the intros you're making are actually useful. Don't make an intro for the sake of making an intro. Make an intro if it's useful. Months 4 to 6, if your goal is by month 6 to be in a VC, this is when you start, like those 3 months is when you start really curating your deal flow. It's start thinking about it as if you were already a VC, about who do I send to what VC, specific verticals, like if a founder is raising a round, say, hey, dude, I'd love to help you raise your round. What VCs are you targeting? And start then building the relationships with the VCs from like month 4 to 5. Build those relationships with those VCs. Month 6, just start sending deals. This is when all the deals you've built up around the last few months, all these founders that you met very early on who just had an idea that are now actually raising a round, this is when you start introducing. And so the VC specifically. And have like a structured way to do it. Like this VC invests in this. This founder wants this VC. Like segment things in different buckets. So everything you do is extremely relevant to everyone. Quality, quality, quality. Don't waste people's time and they won't waste yours. And these people that you've met in the first 3 months, they will introduce you to other people as well if they like you. And over the course of the 6 months, it's so corny to say, but just be yourself. Like don't be polite. You don't have to be polite. Be a good person, obviously, be a kind person, but just be yourself. Have strong opinions about what you believe is right. Don't just say, oh, I agree. Make your own opinions. That is something that is always very valuable and interesting when you're talking to someone. Someone strongly believes in something and they have reasons to like believe the way they believe. There's more substance there to diverse and it makes them more memorable. At the end of the day, when you're having these conversations, you need to become memorable. So have something you believe in that is different from everyone else. But don't create something that is different for the sake of being different. Like I feel like that's easy to tell. Some founders, especially like I feel like in the SF world, we're seeing it a lot now, is like they're being delusional for the sake of being delusional because they know how to play the VC games where it's like, whoa, the guy sounds crazy or this girl sounds crazy. Then there must be something to it.
What would be your recommended 6-month plan to fully break into VC for someone who's doing their master's degree right now? And say like month 1, 2, 3, 4, 5, 6.
So the first thing I would recommend if you want to get into VC, so identify some either courses or books which are must read. And the other thing is right now, pick some industry which interests you. Like most of you will be interested in AI-driven startups. Start reading reports about this niche, like best deals, etc. Looking at those companies. The other thing I would recommend you start attending some startup events in your area. Probably you have an accelerator, incubator, etc. Then volunteer somewhere. Find, for example, there are incubators, accelerators, demo days, etc. And just come and say, I want to get into VC. I want to contribute. Like, I don't know, will you pay me or you will not? I want to be around this place. So network, attend the events, talk to people, read about it, participate in courses or read books about it. Look why some startup has raised money. You can also volunteer to help some startup founders to build a pitch deck, to put together a pitch deck, to do research, etc., etc. And try to find a mentor. As I said, like reach out to partners, principals, associates, and say, like, give me 15 minutes of your time. I want to learn how you get into the VC and go into to be there. And if you send enough emails or contacts in LinkedIn, you would get a necessary number of answers, and probably you even find a mentor coach who could guide you through this journey. But persistence is a must. Persistence, and first start from understanding why you want to get into VC and if you have a right intent.
For our viewers who needs an actionable plan to implement right away, what would be your 6-month plan to fully break into VC for someone who could be a GTM role, or it could be someone who wants to start a fund?
I'd say your first 2 months, read into like venture deals, right? Follow some of the big ones, right? Listen to VC podcasts, listen to Joe Zhang's podcast. Yeah. I like listening to All In podcast, 20 VC, Harry Stubbings is great. And so I think those first couple of months do that. And I would say 6 months is pretty rapid, but okay, let's just go with it. Those are the first 2 months. Next, month 3, maybe reach out to a few VCs, right? Network with micro VCs, right? If emerging fund managers, right? Research the portfolio, maybe write up some mini cases about them, right? Engage with the partners. And then I'd say month 4, start building your personal brand, maybe share some insights, your reflection, right? Your perspective, show the way, show your thoughts and your thinking. I would say month 5, attend some events, demo days, right? I think demo days are big. You need to attend demo days. I've attended hundreds of these and listened to hundreds and, of pitches, right? And understanding and learning what to look for, what to pick out, right? Some of these syndicates will have demo days where all you get, and that's the format that we have, is really all you have is 7 minutes for each demo, from the pitch to the questions, the panel questions, to the rebuttal, the response from the founder. And that's it. You make your decision. Well, that's it for the exposure you get to what you hear from the founder. Then you go do your research, right? You go do your research, you get the demo, the deal memo, and you look at and read and understand what's going on. So I would say that month 5, the demo days, that you need to do as much of that as possible, right? And then month 6, set up some in-person coffee chats or virtual coffee chats. Ask smart questions, right? Be curious. Don't ask for jobs, right? And just be open to learn and get to know various folks in this space. I would say what I shared with you is around starting a fund. There's a lot of opportunity to do great things, and the technology has reduced the barrier of entry, right? So now founders are no longer limited by their access or their capability, because they can get that augmented very quickly with AI tools and whatnot. Companies no longer need to be built using millions of dollars to reach $1 million in ARR or 10 million in ARR, right? You're going to see companies with a handful of people reach unicorn status in the next few years. It's just a matter of time. So I would say spend time in listening to those demo days. Try to join as many as possible. Local, go in person, go virtual. Don't be limited, right, by the location, and just keep exposing yourself to that space.
For our undergraduate students who needs an actionable plan to implement right away, what would be your 6-month plan to fully break into VC and say month 1, 2, 3, 4, 5, 6?
Okay, that's very specific. I'll try to be quick. What would I do in month 1? In month 1, I'd probably focus on understanding the VC landscape. So really learn the basics, the stages, what's an LP, what's a GP, what's kind of the model, what's a power law. Maybe start reading some books and blogs like Venture Deals, bit of Twitter, maybe some Harry Stabbings podcasts, maybe your podcast actually. Listen to this on day 1 of month 1. Then, try to map the ecosystem a little bit and really get a feeling of the overall landscape, I would say. Then month 2, like latest by then, I would start speaking to people, really reach out to all the VCs and the VCs they know, speak to all of them, speak to also angel investors, to get like different lenses of investing. Probably just ask for like 10 or 15-minute chats, because as VCs we have so many calls with founders per day. So maybe the shorter, the better. And then learn everything about career paths, fund cultures, and like the day-to-day work of a VC. And then probably by then you should start drafting something like a thesis, right? That sounds a bit drooling, but it's nothing more than having a hypothesis on certain markets or certain companies. And the sooner you start with that, the more prepared you will be for the VC interviews later and for the conversations with funds in general. And then by month 3, I would by then start targeting funds that fit you, identify like maybe 10 to 20 funds that do align with your interests, with your skills, with your values. But then you should probably also already know which fund is the right one for you. That the small Vienna headquartered health tech fund comes storm, or is it a big generalist Berlin fund cherry? But then you should more or less know this and have like a short list versus like scattershots, in my opinion. But then you should really start already doing the work for them, like scout for them, source deals, like start thinking what value you could add to them. And then in month 4, really try to decode this like hiring game in VC in terms of, we discussed before, there are very few open roles and most of the jobs are, filled via the network. So you have to kind of look beyond VC analyst roles, but really start reading between the lines in terms of which funds recently had a lot of churn. Like, you saw this fund, okay, 3 analysts just left this fund. Maybe they are hiring before they even have something out there. This fund there, they just raised a new fund. Maybe they need to hire someone. So be proactive and read between the lines. And of course, try to get warm intros through founders of these companies, or founders of these funds, or through some of the investors directly within the fund. And then by month 5, I would probably start having interviews and really make sure that by then you have the basics nailed, like everything we discussed before, the storytelling, the why you, the deal thinking, and so on. And also all the preparation we discussed for the interviews. And by month 6, I guess just close the deal. Like, but then you should be deep in the processes. You should have an idea which funds fit you, and ideally have some offers by then. If not, reassess, go back to what we said in month 3 and 4, which is the shortlisting and doing the work for it, and do it again.
For our viewers, who needs an actionable plan to actually implement right away, what would be your 6-month plan to fully break into VC for the people who's from a startup?
Sure, yeah. I'd say, depending on where you're starting from, I'd say the first couple of months when you're working to break into VC, I'd focus on really just getting smart. And by that, I mean, whatever your preferred method of media is, whether it's watching videos, reading books, listening to podcasts, doing that as much as possible. And not just learning about venture, but also learning about the different industries that you can really develop some of your own theses, since something you'll get asked about in interviews is, what industries are you most excited about? Do you have any hypotheses about the future of what's going to be the next hot thing? You'll get asked about AI. You'll get asked about all your theses. So I'd say really building up that personal understanding beyond just what venture is, but also if you have a specific industry focus like healthcare, finding 3 trends in health tech you're really excited about and getting knowledgeable on some of the companies in that space, some of the new technologies there, really building that up. There's a few podcasts that I like to listen to. The All In podcast is great, but also just listening to the daily news and Wall Street Journal, just understanding what's going on in the world. I think something that helped me a lot is at Georgetown, I was a government major as well as econ, so understanding that macro perspective of how a tariff or a war or something like that may impact certain industries, and developing your thesis around that. And then after you kind of get smart on venture and those different industries, once you do that, I would then do research into what type of funds are the most appealing for you. So going into it, you may not know, oh, do I want to be on a small team or a big team? Talk to people, ask around. This is the time to have those more casual conversations with people who might be more like your peers, like a new analyst or more junior level associate, having those conversations, figuring out, am I really interested in this one specific industry and I only want to apply to venture funds there? Maybe you come from Latin America and have a really strong thesis about investing in startups there. Or maybe you come from the Middle East, so you might also have a geographic lens, and that might impact the funds you want to apply for roles at. Or maybe you really want to do Series A, Series B as opposed to pre-seed seed. So I would figure out really what you want and then structure your learning and your networking around that. Something I did after those tasks is developing an Excel spreadsheet of all the VCs that fit the area I wanted to go into. And so for me, I knew at the time I wanted to either stay in Boston. I grew up here, love the Boston community, or go to New York. So I made a list of all the VC funds that were pre-seed or seed stage generalist funds in Boston and New York City. And then I ended up filtering it after I had some additional conversations to be smaller teams, since I realized I really wanted a role where I could kind of go over the whole life cycle of a startup, from first investment to follow-on investments to portfolio management, as opposed to a role where I were just doing sourcing. So for me, that was where my interests were. But if you're someone who is very gung-ho about diligence and you only want to do that or something, you can also find those roles, or you really want to do platforms. So I'd say making that list of VCs really helps me target my outreach. And then finally, once you have that list developed and you have your internal thesis developed, I would start having coffee chats and conversations and calls. And you may reach out to like 200 people before you find the role. It may take a really long time, but the nice thing is, even today, 2 years in at Two Lanterns, some of the people I talked to when I was first recruiting are people I've kept as contacts and now I can share deal flow with. So it can only help you to expand your network. And who knows, maybe you talk to someone and you don't get the job there, but they intro you to the person who is the one that hires you. So I'd say, yeah, starting with research, then the target list, then eventually going into those conversations.
For a college student, what would be the 6 months? Month 1, 2, 3, 4, 5, 6.
Yeah, that's a good point. I think month 1 and 2, I'd start reaching out to alumni, people in the space, people that are investors or operators that have graduated from your university. Month 2, I would spend really time getting the basics. So doing there's a bunch of YouTube courses, or just understand how does venture capital work? What's the mechanics? How does a fund raise? How does a fund make money? I think a lot of people actually don't understand, how does a venture capital fund make money? It's only made money through liquidity events, through selling secondaries. You need to understand the business. How is this a actual business model for a venture capital fund? So understand the basics of that. Month 3 and 4, I'd continue to kind of, have conviction about industries, go research on startups that you love, go and write about industries that you think you're interested in. And then month 5 and 6, I would say, go and kind of, scour the internet for jobs, go and reach out to people that you reached out in month 1 and maybe ask them, if they're hiring, but more low key. And always continue that process of learning, and because it's a space that you can always learn about. So there are a ton of books, Venture Deals or Brad Feld. There's a ton of resources online. Keep learning, because it's a space that I'm still very junior in, and I'm still learning myself. And so I think the cycle can start at 6 months, but it's always a never ending cycle. But that's what I would recommend for people looking to break in.
For our viewers who needs an actionable plan to implement right away, what would be your recommended 6-month plan to fully break into VC for ex-founders? And say month 1, 2, 3, 4, 5.
So if you're ex-founder with an exit, the best way to start putting small checks into VC fundable startups. That's what a lot of people are doing. But I think a lot of people doing is wrong by putting too big checks. If your exit was 10 million, don't start with putting K checks into random companies, because most of those are going to be write-offs. So put K checks, put 10K checks, and actually spend time with those founders and learn
if your check made any sense, if those founders, are building anything good, if this was like actually a good decision. So like you have to learn by spending. If you just learn by talking, it's not working really well because the founder's not gonna actually, spend time with you, because once you actually put your money where your mouth is, it's way easier for them to cooperate with you. And it's also, you have a, stake in the company, so it makes sense for you to be helping. So I would start with angel investing if you can afford it. If you cannot, I would say programs like 101 or Coconut Head Fellows or VC Lab are really good if you put the time and if you put the effort. I'm so not pleasantly surprised, but people who go through those programs, including some of our ex-interns, were not that great, who just don't put enough effort. They're like, oh, I made it, so I'm gonna put in my CV. No one cares. Like, we're not such a big brand yet. You have to really grab things for you. That's what you're doing. You finish the program and you kind of took the next step. You're building your podcast. That's what I want to support you, because you're putting the effort. And if you put the effort during the program, you build actual connections, meaningful connections. Those are gonna have amazing interest, for you in your life. But you really need to put the most out of it. Like all of those things that you do are an investment. So those two, network with funds, see what you can bring to the table. If you can bring the deal flow, if you can build if you can maybe start recommending, have a few funds that you like in your geo or in your industry, make friends with the partners or with the principals or with the associates. Doesn't really matter. Bet on the right people and be very helpful to them. Maybe you invest 10K in that startup, bring it to the VC and say, hey, why you love this? And then you're gonna kind of start understanding how the VCs think, how other co-founders think, how other angels think, and you're gonna start also learning whether it's actually for you, whether you actually want to be in a VC. The sad truth is, or like a good truth is, I don't know, is that most founders are not great VCs, and most great VCs wouldn't be great founders. It's a very different job. So if you are an exited founder, if you're an amazing founder, I don't know, maybe VC is not for you, because VC is like for HGHV people. Like you just, it's not like for founders, you have like one product, you have to really focus on selling, you have to really focus on building on your customer. It's kind of, what to do. The life of VC is like almost like constant notifications and constant decision making, whether I should pursue that or not. You're being bombarded by everyone, and it's a good thing. You really have to take those chances, which for everyone else from outside of the bubble, you just kind of have to silence those because they disrupt your work. For me, this is the work. The disruption is the work. So if I miss an amazing, intro from someone that could be my fund returner, I suck at my job. So I cannot silence those. I have to really fine tune my mind into really taking every opportunity possible. At some point, it's not possible. You have to still make a filter, but you have to be way more open versus as a founder, you don't have to go to conferences, only those that you can sell to. You only fundraise when you need to fundraise. You don't fundraise, you have to really be way more kind of structured in how you run the business. So very different businesses. I would say I was not a great founder. I'm a better VC, I think, than I was a founder. And for a lot of great founders, angel investing is the way to go.
What would be your recommended 6-month plan to fully break into VC for investment bankers?
Definitely. In month 1, I would really try to learn more about the industry of venture capital. So I would recommend reading things like term sheets and negotiations. I would recommend signing up for newsletters like Axios Pro Rata and Term Sheet that really track the venture capital deals going on, and starting to develop a thesis about a sector you're really excited about. So learn about what venture capital is, learn about sectors, and learn about deals to start developing a thesis. In months 2 and 3, I would really think about starting to do outreach. Most of the time in venture capital, I would say with the exception of perhaps investment banking and consulting, it's usually more outbound outreach than recruiters coming in with jobs. I would say especially for firms that are smaller, they oftentimes don't necessarily work with a headhunter or recruiter. And so I would actually encourage folks to outreach to at least 10 to 15 firms and not necessarily say, hey, I really want a job, but just learn more about them and what their investment focus areas are and start sharing deals that you see. Or if you're in investment banking, you have a whole research team, so you can share your research with them, right? You could share your trends with them. You could start offering value, going back to offering value and building genuine relationships, right? And you can also think about in your job, and this is what I tried to do when I was an investment banker, when I would look at different companies I work with, I would try to ask myself, would I invest in this company? And write out the thesis and the risks. So you want to start thinking like an investor. In month 4, I would start thinking about how do you translate what you've learned in the VC space, your thesis, your outreach, into things like thought leadership and into things like actually starting to share deal flow and build community or whatever that looks like, to the extent that your firm allows it, right? So obviously there are certain firms with strict marketing guidelines or strict public or social media guidelines rather. So whatever is within the bounds, start thinking about how can you share these insights with other people. And then in months 5 and 6, I would start actually going to things like demo days. I would start looking at certain incubators, maybe going to YC's demo day, Techstars, etc., and see if you can even land a part-time thing or an internship in some way at a VC firm to get some experience. The best is if you could apply and ultimately land a role from some of those relationships that you've been cultivating since months 2 and 3, right? And so that's a 6-month timeline. Can definitely really vary. And I'd say just to be actionable, that's what I would recommend.